Amit Pabari, founder and managing director of CR Forex. They say reversals are always painful. On 4th November, rupee closed at 82.44, while this Friday it closed at 80.80. Now let us understand what triggered this momentum. There were two reasons for the same. First, US midterm election, and second, US inflation data, which market was expecting at 8.1% or 8%. It came at 7.7%. The data were not drastically down, but market reacted much negatively than what we were expecting. Now, the big question is what next in rupee. Before answering into that, let us understand why rupee was weakening from last 6 months. There were two important reasons for the same. One was dollar index में rally था, and second was higher trade deficit in India. Now let us understand why dollar index was moving higher. Dollar index का logic ये था कि inflation in US is going to be there and Fed has to increase interest rate in coming days aggressively. That fundamental reason still prevail. But what has happened in dollar index last week? It has closed below its critical level of 109.50, which is a first indication that the reversal in dollar index might have happened. By looking at dollar index rally last week, we are getting an early indication that dollar index might have got top out at 113, 114 kind of a level, and rupee might have top out at 83.20 kind of a level. In coming days, we expect that rupee should take support between 80 to 80.50, and we are expecting some kind of a bounce back towards 81.50 to 82.20 kind of a level. Now there are three reasons why we are expecting some kind of bounce back in rupee. Let us understand that. The first reason is trade deficit. If you see the chart, the average trade deficit for India was between 10 to 15 billion dollars. Now it has increased to 25 to 30 billion dollars per month. We are expecting the trade deficit to continue to be at a higher level because of three reasons. First, export has come down. Second, we expect the import to continuously increase because of stronger consumption story. Third, some data points are showing that in last 2 months we have heavily imported gold. The second reason is that we think that RBI might come and intervene in the market and start buying dollars between 80 to 80.20 kind of a level. From last 3 years, what we have seen is that whenever there is an inflow, RBI will come and buy dollars. Exactly that they have done between period of April 2021 till September 2021, where they have bought dollars close to $62 billion. And when there was an outflow, they immediately entered into the market and they started selling dollars. In last 6 months, between March 2022 till October 2022, they have sold dollar close to $75 billion, which indicates that RBI will be protecting both the side in the market, and they might intervene close to 80 to 80.50 kind of level. Third reason for rupee to bounce back is there is a strong support between 80.20 to 80.50 kind of a level, and ideally it should hold for some time and we should get some kind of a bounce back. Now let us discuss strategy for thin margin exporters. Thin margin exporters like agri exporter or chemical exporter. If anyone who has taken costing above 81.5 kind of a level, what we are suggesting them is that they should keep a final stop loss of 80.20 and wait, and any bounce back towards 81 to 81.5 kind of a level should be taken as an opportunity to sell. If someone has taken costing close to 80.50, what we are suggesting them is that 50% of their exposure they should sell between 80.70 to 80.80 kind of a level. Stop loss is 80.20, and for remaining 50% they can again target 81.20 to 81.5 kind of a level. Again their stop loss is also 80.20. Now let us discuss strategy for thick margin exporters. From last 6 months, what we were suggesting thick margin exporters was to maintain a hedge ratio between 40 to 45%, and last time we suggested them to participate between 80 to 40 to 82.60 kind of level. Now we are proposing them three kind of thing. As dollar index has closed below 109.50, any uptake in rupee should be taken as an opportunity to sell dollar. That is idea number one. Idea number 2 is that they have to increase their hedge ratio from 45% to 50%. Third, in order to increase their hedge ratio, they can participate close to 81.20 to 81.50 kind of a level, and they can keep a stop loss of 80.20 for some time. Now let us discuss strategy for importers. Importers must be feeling really bad that they have hedged at higher level and rupee has strengthened in last 1 week by almost 2 rupees, but that is a part of the trade. Fundamental factors from last 6 months were favoring those importers who have always hedged. Now, if any importers who have not covered their near-term imports, we are advising them to cover their import for next 10 to 15 days between 80.40 to 80.60 kind of a level. Now let us discuss trading ideas for the coming days. We had given a sell call on Euro USD between 0.9950 to parity. Targets are 0.9750. Stop loss is 1.0050. The stop loss got triggered. If anyone has traded, they might have lost 82,000 rupees in the trade. For coming days, let us analyze the market and we'll come up with a new trading idea. Till that point of time, Jai Hind, Namaskar, फिर मिलेंगे. Thank you.